A sim trade for payout prop firms. It's gaming. It's not trading. I'm not sure it's legal. It's very competitive in the United States. So what we have is poker. They're all in the same bucket. Sim trading for payout, I think, is really stretching the legal boundaries. But some of these firms actually move these traders into a funded position where they're trading real markets. Now, a lot of them say they do that, and they don't, which to me is fraudulent. First futures trade 1974. First profitable year was 1979. I figured I've traded 25,000 trades in my career.
How much had you gotten your capital up to leading up to 87?
Probably up to 10 mil. There's a lot of studies that show people that day trade are far less successful than position trade or swing trades because it's a different world. My recommendation to people is not to be a day trader in the first place. I just think day trading is a trap. If you don't know this, you shouldn't be trading. The more you're obsessed over details, I think the better off a person's going to be if he's pursuing a life as a trader. What I'm going to tell you is going to be true no matter how you trade. Day trade, swing trade, position trade. What I'm going to share with you right now is going to be true for no matter who's listening to your podcast.
Number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Hey everyone, before we get into this incredible episode, I just want to say a massive thank you to all of you supporting the podcast, from subscribing, commenting, sharing it with your fellow traders. It has allowed us to grow every single year. We're only 3 years in, and we're already the number one podcast in the world. And that's thanks to all of you and our incredible guests. Talking of which, we started this podcast interviewing just my friends who traded. Then suddenly we're interviewing the biggest influencers in the trading space. And then I sat down with Jack Schwager, the author of Market Wizards, who inspired millions of traders across the world, including myself, to start this podcast. Now, in January, we did a tour with verified traders all over the US, over 20 podcasts with the biggest and brightest and best traders in the world. We're talking over $1 billion in verified profits across them all, hundreds of years of experience across them all. And I am committed to bring you the very best every single week, in person, high production podcasts so that you can learn and level up your trading from learning from these incredible traders. Talking which, today we have Peter Brandt, a 50-year trading veteran who is a verified 8-figure trader, a masterful technician and master of technical analysis, and still is active to this day. Has very interesting opinions when it comes to evaluation firms. And I've partnered with Market Journal, where every single week throughout this tour and every single week with our incredible guests, we're going to provide a free PDF breaking down all the key lessons from every single episode. It's completely free. Market Journal itself gives you weekly insights of what's happening in the markets across crypto, forex, futures, stocks. So you know exactly what's going on. You do not have to panic. You do not have to worry when you see these large moves. That's what Market Journal is there for. In this week's edition, you're going to have 50 lessons from 50 years of Peter Brandt's journey. So just sign up. The edition goes out every single week. The free PDF will be in there. The link's in the description below. Thank you once again. Make sure you hit subscribe. Make sure you hit like so we can reach even more incredible verified traders. Now let's get into this episode. Welcome everyone back to the Words of Wisdom podcast. Still the number one trading podcast in the world and the fastest growing, thanks to all of you and our incredible guests. We're still on our incredible US podcast tour, and it's our final podcast here in Arizona. And the podcast tour wouldn't be possible without our sponsors, TradeZella, the very best trading journal for in-depth analytics, backtesting, and so much more. So make sure you check them out in the description. A huge thank you to them for helping us reach these incredible traders. And this is one of the podcasts that we've been so excited for throughout this trip. And from unknown market wizards, a prolific author within the trading space as well, has over 700,000 followers on X, which is incredible as well, blows me away. And he also made a 600% of record year in 1987 and had a phenomenal career, a 50-year trading veteran. It's the one and only Peter Brandt.
Thanks, Riz. Great to be with you. Great to have you in Tucson.
Thank you.
Yeah.
No, I really appreciate it. And I appreciate us being able to come and visit you in your home state. Incredible space, incredible place, should I say. But Peter, I want to go straight into a topic with you. because I know it's one that you feel very strongly about and had a lot of communication online about as well. Different, people agreeing, a lot of people disagreeing as well. In terms of the new prop firm that are available now, well, some will call them evaluation firms. Why is it that you feel so strongly about those?
Well, there's a couple of reasons, and thanks for the question. It's great. We could do our whole thing today. I could go on with this in so many different rabbit trails. In a sense, I like the idea that people who are aspiring to be traders have a venue where they can go and trade more money than perhaps $1,000 that they have in their bank, right? As they aspire to be traders. I think it's so awesome that so many, especially younger people, aspire to the world of market speculation. I just think back to when I got in it. My goodness, I started at the Board of Trade. There was third of the floor of the Board of Trade were World War II veterans. Wow. And so that's how long I've been around. And so we have this whole generation of people excited about trading. That is fabulous. I have really two issues with this kind of sim trade for payout system, this new proliferating world of prop firms. The first one is I'm not sure it's legal. Now, the reason I'm not sure it's legal is I really find that it's very competitive in the United States. So what we have is either online poker. Mm-hmm. We have online poker in the United States. We also have online betting in the United States for sports. And really, when I look at that industry, I say they're all in the same bucket. And so I just think that it's a stretch to say that this is a legal operation. Now, I think the day will come when some federal regulator is going to come in and agree with me and say, we cannot have sim trade for payoff. We can have sim trading, which I totally agree with. I totally support the idea of sim trading, but sim trading for payout, I think, is really stretching the legal boundaries. And if it's stretching the legal boundaries and we come to the point where regulators say this is an unregulated industry, they need to pay state taxes, because that's what the other online gambling or gaming sites do. They pay significant amounts. For instance, state of Illinois, to have an online gaming operation in the state of Illinois, if you're online, it's $1 million a year. And so it's significant. And there's also significant state tax implications. And so what you have is an industry that's run wild, with wild claims, exaggerated claims that are undocumented. I think promotional activity that's really questionable. So I just say, fine, if you want to do sim trading for payouts, let's make it like sports betting. Let's make it like online gambling. And let's have these firms be properly regulated and properly taxed. Then I'm fine with it. There's another reason, which really is a significant thing to me, and that is when these people go on and pay their $200 a month to have this simulated $100,000 account, let's say, they're forced into a box. The thing that I've learned from trading, from knowing traders, from being at the Board of Trade, where I'm in a building of traders, I'm riding on elevators with traders, I'm eating lunch with successful traders, as well as Commodity Corp, as well as my connection with an awful lot of the market wizards. Jack's interviewed 71. Not two people trade alike. They're lone rangers. They develop their own approach to trading. And to do that, you have to do trial and error, where I look at the sim world and they're kind of forced square pegs into square holes, round pegs, restrictions. How many days a month do you have to do? 5 days in a row with a $200 profit, so on and so forth. So yeah, it's gaming. It's not trading. Let's not call it trading. Let's call it gaming. Let's call it for what it is. Now, where I'm supportive of the industry is in those cases where somebody proves they have talent in trading according to the rules, and they've at least figured out that. Because what that tells me is you have an individual who's a problem solver. He has figured out how to game the system, and he has made money. And if he is successful for that, there are some of these firms, an awful lot of them don't, but some of these firms actually move these traders into a funded position where they're trading real markets on real exchanges through real brokerage firms. Now, a lot of them say they do that, and they don't, which to me is fraudulent. Which comes back to kind of my first opposition to the thing is highly exaggerated claims. But then I'm fine. I am great with that. Move these people in. And I think the third thing, just bouncing off of it, is claims. Let these firms, like they do in the UK, for instance, these Forex firms in the UK are reportable. They report to the government what percentage of our clients made money, what percentage are profitable after a year, what percentage are profitable after 2 years. And in the UK, they have to actually claim some statistics, not in the prop world today. And my guess is for every 1,000 accounts that are open with these prop firms, that maybe 1% are profitable at the end of the year. Maybe half of 1% actually can be moved into live, funded, real market, real futures trading. I just think those numbers need to be disclosed. And so you clear all of that up, I'll endorse the first firm that does that. And there are some firms moving in the right direction. I'm not going to name them because then I exclude ones that maybe are that I don't know about.
Of course, yeah.
Or maybe I name one that has fooled me and they're really not trying to clean up their act. So I don't want to name one. But I think if these firms go there, then that's prop trading. But it's gaming, it's gambling, and let's not call it trading.
Definitely. I think you make some very, very, very valid points. And I think I loved how you started with the fact that it is a great opportunity and that, you understand why traders can go for it and it's presenting something that they wouldn't ordinarily have. But equally, I definitely agree with the point where the rules force traders to act in a certain way. And as you mentioned, and as we all know, your trading is very nuanced, very personal. And therefore, by doing that, it can be forcing a lot of traders who maybe shouldn't be trading that way and probably are trying to force a way of trading that is against their personality traits and their personality and their setup in life as well and their routines, etc., to where they're not going to really see change because they're really trying to force something that is being enforced on them. But equally, it's kind of like, if that's the rules and you don't have an edge that fits those rules, you probably shouldn't step into that anyway.
Well, I'd like to see, these are simulated accounts. You can't lose simulated money, but yet they're still forced to day trade. Why are they forced to day trade? Because I believe that most of these firms have put together rules that are optimized for the traders to end up paying their $200 a month in fees and not getting anything back. They're optimized for failure. And it's also not a zero-sum game. They're trading against the house. They're not trading other people's. It's not like a real exchange. When I buy something, when I buy crude oil, somebody sold it to me. And so there's somebody on both sides of my trades. The other side of these trades are the house themselves. So they're betting against the house. And so I just think to some degree it's a rigged game. And that to me, I just find personally offensive. As somebody who's basically made their living for 50 years trading real markets. And, it's a good point that they can move into a world potentially that they couldn't move into the long road. I look at my experience back in the 80s where I grew an account, but the minute I started trading real prop money, which was Commodities Corp, all of a sudden my AUM relative to my own capital is 10x. And so, that gives me opportunities to do things. And so I'd really like to see some of these firms say, you can trade whatever way you want. We're going to have sim trading. You can pay us for a sim account. There's no payouts, but you can experiment and you can really find a way for you and a process that works. And that may not be day trading because quite frankly, there's a lot of studies that show people that day trade are far less successful than position trade or swing trades because it's a different world. And so why not stack things toward the advantage of these new aspiring traders? Let them trade that for a year. Let them figure out a trading approach. Then let them see if they can actually qualify for real money, trading a way that they want to develop that really fits them. That's their own. Let them be the tailor for their own clothes and wear those out and go styling.
I like it.
Yeah.
No, I like it. And I think that traders, it'll be interesting to see, like there should be an option really where if a trader has developed a system and edge and can prove that edge, then, you know, a firm would hopefully, because I think where you were correct in particular as well is the miscommunication of their intention.
Yeah.
Because a lot of the time they'll promote themselves as like, we're here for profitable, you know, we want profitable traders, we want to help traders. And when it might not be, not that they all will have a very negative spin, like, oh, we don't care about traders, but it's more so they understand the model. And if that was true though, they would have options where, you know, if they have a profitable trader, they're not trying to restrict them, they're trying to help them. They want them to grow and they want to be able to collaborate so that they benefit off the back of that trader. Because finding a trader with edges, you know, it's like finding gold. It's something that's unique.
The world needs traders. Yeah. I mean, trading and prostitution are like the two oldest professions, right? So, yeah, let's keep them. Well, let's keep trading. Legit. Yeah.
No, I love that. And in terms of that, though, as you mentioned, like when you started, you had to build your own capital, and though it takes a longer period of time, how important though was it? Like, how helpful was it to actually go through that process, no matter how long and painful? Do you think it really is what built you into the characteristics?
Yep. I mean, if you talk to Jack, the interesting conversation to Jack is kind of describe some of the commonalities of 71 traders that you've talked to. And a lot of traders you've talked to that eventually you didn't put in the book, but you've heard their story.
Yeah.
Because I know a lot of these people. There are some commonalities. Of that 71, and I may be off, it may be 71 plus or minus some number.
Of course. Yeah.
But of those 71, there's probably less than a handful of guys that hit the ground, started trading, and instantly hit it. They hit a market. They had the skill. It just was so natural. Just like in sports, just like in soccer or American baseball or tennis, there are some guys that just, they have it. They have the gift.
Yeah.
And they hit the ground running. And so of the 71, you might have had two or three. Jack would say there might be two or three that were profitable in the first year and they never looked back. But when you take the rest of them, they're more similar to me. I blew up accounts. I don't know how many accounts I blew up, maybe 3. And this is real money accounts. This is money I saved up. I deposited it in a brokerage firm and basically went from trading beans and having the margin to trading beans to finally having to trade oats and then close my account. And so I think that's a more common route, is somebody is trying to figure out and solve the problem. What does that problem look like? What hurdles do they need to get over? What things do they need to figure out? What do they need to internalize? What are their inner battles? What are their inner demons, and how do they deal with their inner demons in trading? And I think that takes 3 to 5 years. I think it takes 3 years to pick up the scent for most people. Is okay, I have a sense for where I might go. You know, I want to be a chartist. I want to trade global macro. I want to trade stocks. I want to trade futures. I want to trade Forex. I want to have 2-day holding periods. I want to be a long-term position trader. I think it takes 3 years to pick up that scent where you go, I have a sense for the direction I'm going. And then it takes another 3 to 4 years to work out the process. So we're dealing with 5 to 6 years. And that's an exception, because most traders who put real money on the table to trade blow out that money before they reach that 5 or 6 year mark.
Yep.
The money's gone. And they raised a little bit more money and the money's gone. And so they never last long enough to figure out the game. They're blown out before they figure out the game. I was really fortunate because I went to work for a grain company at the time, the second largest grain merchandiser in the world, next to Cargill. And so I brought in some clients with me. That was the deal. Peter, here's your phone. Here's a desk. Here's your chair. You want to get into the trading business, everybody gets in at the same point. You either run orders on the floor or you try to bring in customers that can do business through our grain merchandising network. And that's what I did. And so I was lucky for those 3 to 5 years. Again, first futures trade, 1974. First profitable year, Riz, was 1979.
Wow.
And during that time, I wasn't a guy working out of my mommy's basement, you know, having a job at Starbucks to get money for the side.
Yeah.
I mean, now it took me a couple of years to really develop this business, but I had fairly good size income coming in from the fractions of a cent per bushel of corn that I would get for customers I was bringing in the door. And I had some nice customers that were trading 2-3 million bushels of soybeans or wheat at a time.
Wow.
100 bushels, 100 contracts of silver and so forth. And so it was from that income that I would find $10,000 and put it in the markets and blow it out, 10,000
Wow.
blow it out. And so a lot of people don't have that. And so I had income to come in and replace and give me the money for the next account that I'd blow out till I figured out and had a sense for where I was going to go. And that was 1979. And that's when I kind of had a sense that I know what kind of trader I'm going to be. I can envision that. I still have a lot to learn. Yeah. It's still a steep wall that I have to go up. And it was really then 1980 was the first year that I had really a meaningful profit, and really felt like, hey, it's still going to be a battle, still a lot of risk. I still have to guard my capital, but I have a shot at it. And then it was October 1981 before I resigned all my accounts. Actually, I sold my accounts, my grain accounts, and started my own account, started Factor LLC, as incorporated it, Chicago Board of Trade, and went all in, and it was my money, and it was only my money, and here we go, boys.
Profitable trading really boils down to two things: opportunity and volatility. And that is why the podcast has partnered with Market Journal. Because between the years 2016 and 2020, the amount of opportunity that was available, as well as volatility to take advantage of, was at the highest it's ever been. And all of that really pointed towards one man, President Donald Trump. During his period in office, all it took was one tweet, and that would present so much volatility, and the right traders would take advantage of that and would create their record P&Ls. And that is why those same traders are so excited for this new period between 2025 to 2029, when we have President Donald Trump back in office. Now, Market Journal is going to give you the weekly insights you need across crypto, forex, futures, and the stock market. So regardless of what happens, whether it's a tweet, a particular stock running up hundreds of percents, whatever volatility and opportunity that Market Journal can identify, it is going to share with you every single week. So you can purely focus on taking advantage of those opportunities and taking advantage of that volatility to create your record P&L. Now, Market Journal is absolutely free. All you do is click the link in the description below, put in your email, and you will receive key updates on the markets every single week. So you are always up to date with what's going on and ready to execute when the time is right. Links in the description below. Thank you for enjoying this episode. Let's take a break for a minute there, guys, because I want to tell you about our sponsor, TradeZella. TradeZella is the #1 trading tool for all traders. It doesn't matter whether you're a crypto trader, a futures trader, or a forex trader. Whatever trader you are, all you do is connect your trading platform directly with TradeZella. It automates and makes your trading journaling so easy. If you want to be a profitable trader, you need Trading Edge, and that is exactly what TradeZella does. It allows you to identify edge, maintain your edge, and optimize your edge by automating your trade journaling, in-depth analytics, backtesting, bar replay, and so much more. Now, WOR gets you 20% off your yearly subscription with TradeZella. So use WOR for 20% off your yearly subscription, or Riz10 for 10% off your monthly subscription. The link is in the description below. Now let's get back to this episode. There we go. Straight into heading in towards that deep end. Before we go into that more, as you mentioned, that 3 to 5 year period to really get a sense for things. Like, what do you think traders in that period of time should be focused on? Maybe to at least keep that 3 to 5 years true, or even try and shorten it a bit if they're focused, because what I would say is the difference between then and now, there's pros and cons. Like the pros, as you say, is you weren't at home, you were around, phenomenal traders, you were in the business, so you had access to certain information and be able to observe other traders. So that's a benefit. But one of the negatives being, though, negatives at that time, is if you were to try and learn alone and outside of that environment, maybe near impossible, maybe because of the information that wasn't available compared to now, like the independent.
But maybe there's too
traders.
much now.
That's an interesting point. Yeah. So like, what are your thoughts? What should traders be focusing on to at least hit that 3 to 5 years? But if you were to say, hey, things that could help maybe bring it down, what would that look like?
Okay, expectations. I'll just go through a list, and hey, I'm winging this. We haven't talked about this, so I'm making this up as we go. Expectations. Guys coming in, and I think expectations have partially been spoiled in in really an unrealistic way through crypto.
Yeah.
Guys buy these junk coins and they do 10x on whatever they put into it in 3 months, 3 weeks. So you have that expectational thing, is they think, okay, they're going to come in and they're going to kill it. They're going to 10x on their money every year forever. Well, the reality is you work out the numbers, and if they do 10x every year for 10 years, there's no more money for anyone else in the world. So you have an expectational problem. Is you don't think in terms of 10x. You don't even think in terms of 2x.
Yeah.
Let's be realistic on expectations. So that's one thing. There's a lot of information. There's a lot of social media. And so there's a lot of people. I had mentors at the Board of Trade. I fortunately had 2 or 3 guys. I don't think I would have made it the way I did, Riz, without a couple guys that were willing to invest in my life. I borrowed money. One was one of the best traders at the Board of Trade happened to take a liking to me. He might have hated my guts. What happens then? So, you go on this timeline and you hope certain things fall into line in a timeline you go on where you hope that things come out the right way.
Would you say that you took a liking to you maybe because of the work ethic you might have shown? And the value you were providing to others as well?
Yeah, I mean, I think so. But he saw that I wasn't just interested in the money. I wanted to learn the business. Because when I went into the business, my goal was really to have it be my career, not to make a fortune. I just thought what guys at the Board of Trade were doing was really, really cool. What a fun job. If you can figure out a way to make a living as a trader and make that your career, like these guys were. I mean, these traders have been down there for 20, 30 years. How cool is that? Markets open at 9:30. They're done at 1:15. You have to come in the morning for your out trades, but you're done for the day. That's a cool job.
Nice.
And so I was interested in the job. The job to me was an intellectual challenge. And so I didn't look at it as I'm going to make a fortune. I looked at it as like, I really want to learn this. And I think he sensed that. As here's a kid, I was in my 20s.
Yeah.
Here's a kid that really is interested in the business for the business sake.
Do you think that's important for the traders out there as well?
Yeah, if you're in it for the money, forget it. You're not going to succeed. That's what I tell somebody. If you're looking at this is buku bucks, I want to trade because of the buku bucks, I'd say, you know what? Become a banker, maybe major in library science. Find something else to do, because unless you're willing to say, I want to do it for the excellence of everything involved, and not just the money, you're in trouble. See, I think that, and I think that there's too much information. We're overwhelmed with content. So you got to figure out who you're going to follow in social media, because there may only be 2 or 3 people that you want to stake your money on. My opinion is anyone that shows a screenshot of their latest big day is the person you want to unfollow. And so if somebody's showing screenshots of their $100,000 day, this is the biggest day I've ever had, unfollow immediately, unclick. Don't follow them again, because you've got somebody out there scamming you. Is follow people who really seem to be providing good information, good guidance to help you excel as an individual trader. I'm going to do the plug right now, because I spent some time watching your podcast, because I was going to do one with you. You have excellent guests. You would be a source of somebody I would say to new traders, words of wisdom. It's a must. There's a few others. And again, I'm not going to name them, because then there's some I don't name.
Oh, cool.
But I'd say find 5 and stick with the 5. Then I would say, if you're going to hop around, you've got to figure out a way. If you're going to be a trader, your goal is I want to trade. You've got to do 2 things in thinking about how you're going to trade. You got to figure out how you're going to trade. And that takes 3 years. Figure out the markets you're going to trade. What's your time frame? how you determine your trades. But you've got to figure out two things. You got to figure out a way to cut your losses really quick. You can't take big losses. Big losses will kill you. And you have to find some way, some mechanism that allows a profitable trade to be open the next day, and then the next day,
so I squeeze
and then the next day. I mean, it's to me, when I joined the board of trade, all the old veterans, cut your losses short, let your profits run. Cut your losses short, let your profits run. That's a fine thing to say, but that's a skeleton. You got to put meat on those bones. It has to become real, and it has to become part of a trader to understand really what that means. Because if you can figure out a way to cut your losses really quickly, you have a chance to have whatever capital you're putting into the game be around in 3 years when you pick up your scent, and to be around in 5 years when you finally think you have something going for you, and to let your profits run, because that is a necessity. And that comes back to the problem I have with the prop industry today. Let your profits run means what now, an hour? I mean, for sure, by the end of the day, you got to be out. Well, by the end of the day, that's not let your profits run. And does that mean cut your losses within a minute and let your profits run for an hour? That's not quite the standard that I'm thinking about here.
Yeah. Well, what do you think? Were there any things that you could say for traders out there that could help them to implement those sort of principles of cutting losses earlier and being able to hold winners?
Yeah, well, my recommendation to people is not to be a day trader in the first place. I just think day trading is a trap. Because when you think about it, now I'm talking about real trading here. I'm not talking about sim for payout. I'm talking about real trading, real money, real markets, real brokerage firms, real floors, computers. No floors anymore.
Yeah.
But yeah, I mean, so you gotta figure out, okay, how are you going to approach this thing? How are you going to select a trade? And the reality is, in the social media world today, most of the emphasis is, what trade do I get into? That's the emphasis. Here's a chart. Here's a good trade. Here's a chart. Gold's going up. Here's a chart. Crude's going down. That's what people are globbing onto. And the reality is, the trade you put on, that's the least important component of trading, in my opinion. If I were to rank all the things that are really important for a trader to figure out, what trade to enter is really pretty much toward the bottom of the list. And it's all the things that come after the trade. It's your sizing, it's how you understand risk, it's how you're cutting risk, and it's how you're managing your head. Because the reality is that everything about a person's character, no matter who you are, is out to sabotage your success if you're a trader. It's out to force you to do the wrong things. You know, you're constantly battling your inner demons as a trader. So my advice to people is, don't be a day trader, but be a swing trader or be a position trader. And in the process of doing that, turn your computer screen off during the day. Once you have a sense of how you're going to trade, develop that not dependent upon what happens to price from the open to the close at whatever time zone you're in. In my time zone is 4 o'clock, right? 4 o'clock, I have a hour break before markets reopen again, and you go in a night session. But for me, what works for me, and to some degree, you got to find out what works for yourself. You got to figure out as a person, well, how are you going to solve this problem? How are you going to be a problem solver? For me, my way of solving the problem was, I'm going to put my orders in at 4 o'clock in the afternoon for the next day. Then I'm going to turn off my computer screen. And I'm going to invest in my process rather than invest in the next trade that I'm going to do, because the next trade I'm going to do is really irrelevant. Trades are unimportant. Trades are simply the next data point in a series of data points subject to random probability. And no, let's say I'm right 50% of the time, generally. I mean, at 52 one year, 53 the next year, but 50-50. what that means is I may think I know what a market's going to do. I may absolutely be positive I know what a market's going to do, but in reality, I don't have a clue. And if I go into a trade, and so my presupposition to tell staff is you're just going to have to assume the next trade we do is going to be a loser. If you assume that the next trade we're going to do is going to be a loser, you're starting off with the right foot.
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, Alpha Prime, the first of its kind in the industry. Now, evaluation firms have been in the industry for the last few years and done absolutely phenomenal in terms of its impact for traders. As you can see here, through Alpha Capital and Futures, so many payouts to so many traders across the world. But now, for the first time, there is an incredible route for traders to become professionals and to trade live capital, and that's through Alpha Prime. So let me quickly tell you how it works. You could just buy a challenge on Alpha Capital or Alpha Futures. Doesn't matter which one. So Alpha Capital, you have phase 1, phase 2, phase 3 challenges. On Alpha Futures, you have standard and advanced plans. Whichever one, purchase a challenge. Show consistency, build your track record, and then you can be invited to Alpha Prime. Alpha Prime, you will get access to live capital. You will get access to risk management and resources at a professional level. You will have a salary as a trader and access to trade on live trading floors starting here in London. This is the first of its kind, where an evaluation firm is finding talented traders and then backing them with live capital and creating a route to professional trading. I am very proud to be sponsored by Alpha Prime. The links for both will be in the description below. Alpha Capital and Alpha Futures, use the code RIZ for 20% off all challenges. Link is in the description below. Now let's get back to the episode.
And as part of that, though, focusing on that process, and interesting about day trading, as you mentioned, is that I have come across a lot of day traders who perform very well, but also swing traders, but also scalpers, also all different types of traders, as you mentioned, though, like what works for you. And what I've noticed is that I have come across obviously the opposite too, where someone's trying to be a day trader and it's not working. Someone's trying to swing trade, it's not working. Mm-hmm. And after speaking with a few trading psychologists like Dr. Brett Steenberger and Randy Howell, Stephen Goldstein, for example, there's what they really deduce and put it down to in the end is like your personality as a human being. Is it better suited to day trading? Is it better suited to swing trading? So, for example, someone who thinks really quickly, reacts really quickly, they obviously shorter time frames makes more sense for that individual.
Totally.
Because they can react on that sort of pace and probably would, overtrade as a swing trader, for example.
I agree. And that's why, again, I would emphasize, I know it works for me. Mm. And I am not in a position to say I have the right way. I have the right way for me.
Yeah.
It's not the right way for other people. But no matter what your way is, if you don't cut losses short and you don't have some mechanism to let a profit to run a little bit, the probability, the statistics, no matter what your time frame is, no matter how quick you are, no matter how long you hold position, the reality is all boils down to a game of statistics. Trading is a game of numbers. It's a game of mathematics. And the mathematics are, no matter what your time frame is, no matter how active you are, if you don't cut losses short and you don't have some mechanism for profits to be larger than your losses. Mm-hmm. And that's all they have to do. They just have to be larger than your losses by some percentage.
Yeah.
And that's the most important thing.
Do you feel like to be able to achieve that, not only the things that you listed earlier in terms of like what to focus on, but do you feel, as you mentioned just now, statistics, do you think you need on your edge or on your strategy, you need to have the statistics that then will sort of indicate to you, okay, this trade, usually if this particular trade has been on longer than 3 hours, it's going to hit stop loss. So therefore I can look to cut this one sooner, versus vice versa. Like if you have a trade, let's say the data says if it's not really had a much drawdown, that's normally a trade that's going to continue to run. So let's hold this. How much does statistics and data collection play into trading?
We have a spreadsheet we use. The spreadsheet, I wasn't really into the data part of trading, for really decades. It's really only about 15 years ago that I just started having this ferocious appetite for data and to become really data-driven in my trading. And we have a spreadsheet that has 250,000 cells
Wow.
that we use to answer some of those questions. And those are important questions. And again, it comes down to an individual. You know, do you go by time? If a trade's not working in a certain amount of time, you get out. Those are data points a trader can develop. There is a point in time for all traders, Riz, where you have to say, I'm going to settle on something. I've done this enough where I need to settle on some approach. It's a foundation. You're pouring a foundation for a building, and you say, I've got to settle on some rules here. Yeah. I've got to come to terms with some of these questions that deal with how do I trade, where you develop that and you know that you're going to cut losses short. You know, you have some provision for letting your profits run, whatever your time frame is. You got to commit to do that, because unless you do that for a year to 2 years, you can't build on it. So build your foundation. You know, most people, they'll change the way they trade based on the outcome of the last trade. Well, if I'd only done this the last trade, it would work. So I'm going to now do that on the next trade, and it doesn't work. So they keep flipping around from place to place. So I think the data that people look for really have to be individual. I know my data points. I look for expected value. We measure win rate. Not this important, but it's just a metric we do. We measure gain to pain ratio, which Jack Schwager is the master of metrics, and we've worked with Jack on metrics. We do profit factor. We do average gain to average loss, and we know a time frame. For instance, we do not carry losing trades home on a weekend. We're swing traders. But if a position is a loser on a Friday afternoon, we're out of it. If we have a loss in a trade for 2 straight days, but it hasn't hit our stop loss, we're going to cut. We're going to cut and run. Because here's the interesting thing, is if I were to take, back in the days, we used to get printouts of every trade. Every trade we do was a piece of paper.
Wow.
Or at least every day was. That day might have had more than one piece of paper. But let's think about that for a minute, because what I'm going to tell you is going to be true no matter how you trade, day trade, swing trade, position trade. What I'm going to share with you right now is going to be true for no matter who's listening to your podcast. So back in those days, we have a trade. I have a sheet of paper. We have a trade. I add a sheet of paper. I have another trade. I add a sheet of paper. And I end up with a pile that goes up to the ceiling. So I don't know, what's the ceiling, 8 foot tall, 8 foot tall ceiling. So I have 8 feet worth. Now I can take that whole pile and I can say, I know how much money net profit. Say that whole pile of paper is $1 million. There's $1 million that came out of that pile of paper. But then the next thing I say is, okay, I want to reduce that pile, and I'm going to put the biggest profits at the top, the biggest losers at the bottom of the pile. All I know is it's a pile equals $1 million, and I'm going to start taking pieces of paper off the top and keep taking pieces of paper off the top until I get my $1 million. And so that's it. And I have talked to traders after traders, no matter what they do and say, and I call that the Pareto factor. The old Vilfredo Pareto, Italian philosopher, economist, is the Pareto factor. 20% of events produce 80% of outcomes. 20%, 80%. Every real trader I've ever talked to, and they may not have thought about it.
Yeah.
But when I explain it to them and say, do you have a Pareto factor in your trading? They go, totally. Because no matter how you trade, that's true. But the interesting thing about that is if you take that 20%, so we're talking 8 feet times 20, we're talking a certain number of inches, and you start taking a look at those trades, at least for me as a swing trader, those trades worked right away, and they never looked back.
Yeah.
And if I were to take those trades and then subdivide them And the important thing is you have plenty of data. You got to have a lot of data to really be mathematical and statistical in looking at your trading. And I take a look at that data and I say, how many of those really good winning trades would I have lost had I got out of them any day that they had a losing at the close? I don't lose much. They still pretty much are there. And then if I take these trades down at the bottom and say, what would have happened if I would have gotten out of them the first day they had a loss, it changes the whole net of the whole column of paper.
Wow.
And so that's kind of the way I think of trading is probability. And so I'm real probability sensitive. And I think the degree, I talk to new traders and I say, have you figured out your profit factor? It's an easy thing to do. I'll send anybody who wants to keep profit factor, I'll send them an Excel spreadsheet. They can keep it up themselves. And it automatically will tell them their profit factor.
Yeah.
And I'll say, do you know your profit factor? And they look at me like deer in the headlights. What's that mean? What's a profit factor? I go, if you don't know this, you shouldn't be trading. Go learn what this is and then start trading.
Do you feel like through that process, though, as you mentioned, like being meticulous and really trying to learn and observe the data, that's what really makes a difference between someone who's maybe profitable short term and lucky to a sense in being profitable? As you know, some people can have a good month, 2, 3, but that's the difference between those who do that versus the long-term 50-year veteran at this point, but like the long-term careers with consistency as well is being meticulous and consistently reviewing, your data.
Well, I think it's meticulous about every aspect of trading, Riz. I mean, it's just not your data. Your data is basically you go to a doctor and they take your temperature and your blood pressure and they might take blood and do a urine sample and we become an X-rated program here now when I say that. But it's meticulous about every aspect. It's meticulous about your mental state. What are you doing with your mental state? Have you talked to Brent Steenberger lately? Talked to Steven lately? Who's your coach? All athletes have head coaches. Most good traders I know have the ability to access a head coach. I've accessed Brent in the past, Steven in the past, when I've kind of felt like I'm hitting a little bumpy road and I need to kind of talk through things. I don't lay on their couch, but I'll have a conversation with them or shoot them an email just to express myself, to get it out, right? To get out what's going on with me. But but it's meticulous about, I know you give me a date in the future that's, let's say, a Friday. 2 years from now, if I'm still trading on a Friday, and give me a time and I'll tell you what I'm going to be doing relative to the markets. I'm meticulous about my schedule. I'm meticulous about how I enter orders. I'm meticulous about how I keep price charts. I'm meticulous about how I enter orders. I'm meticulous about keeping data. I'm meticulous about as many aspects of trading as I possibly can. I want to nail down. And so that level of being meticulous really applies to just about every aspect of a trading operation. And that's what I would aim people toward. Become obsessed over details. The more you're obsessed over details, I think the better off a person's going to be if he's pursuing a life as a trader.
Definitely. And this, in that period of time in the 80s when you first started to really start feeling that consistency growing, it led to, I believe it was 1988, where you had
87.
87,
Yeah,
sorry.
big year.
600% return.
Yeah, huge year.
What was the momentum? What was the key catalyst for achieving that in that year?
Two things. First, taking risks that scares me today. I mean, when I think about it, I look back and go, they could have carried me out on the stretcher on some trades I did. Because I don't think I really back then understood risk the way I do now. And I think to some degree I got lucky just the way that some guys are getting lucky in crypto today. And the guys that realize in crypto today that they happen to be in the right place at the right time and learn quickly that there's downside to what they're doing, have the ability to survive, where a lot of guys that are making big money today will lose it all.
Yeah.
They're going to lose it all. But the guys that figure out, hey, I can lose it all. So now how do I think about it? And so I took risks that I think, right now when I take a trade, I'm risking at most 1% of my capital, 100 basis points. And so, on $2 million, I'll risk $20,000. And so at most, but normally it's going to be less than that. Normally it's going to be 0.6% to 0.8%. But back then I was risking 500 basis points in a trade, and some trades 1,000 basis points in a trade. Wow. And I just happened to be kind of lucky. I caught the stock market in early 1987 on the upside. It was a long side trade. I caught crude oil. I caught heating oil. I happened to catch some currency trades in the 80s that were big trades. And I caught them with big size. But with big size comes downside. And so to some degree, the trading gods I'm not going to take credit for my own intelligence. It wasn't my own intelligence that did it. It wasn't my own hard work that did it.
What gave you the conviction for the larger size? Was it people around you?
I was in my 20s and felt I had, I was invincible.
Yeah.
Just like these guys today. I had good years, 79, 80, 81, 82, 83. I had some good years. And I think to some degree, I was betting big because those were great years in the futures market. I mean, anyone that goes back and looks at the charts of the 80s in the futures market goes, whoa, would I have liked to have been involved in those markets? Had I been there, let's say 2010 to 2014, I wouldn't be talking to you today. I wouldn't be sitting in this chair.
Yeah.
Because there were terrible marks. There were no trending marks. All the trend followers in futures lost money in that 2010 to 14 period. They all lost money. A lot of them just closed up shop because they couldn't make it.
Yeah.
We didn't have trending markets. We didn't have markets that followed through. So I happened to be fortunate enough to be in some really, really good markets. I caught some good markets, and I owe it to that. And then I think it was later that I realized, I really keep track of drawdowns. I know my Kelmar. I know my MIR ratio. I know my 3-year rolling Kelmar, my 5-year rolling Kelmar. I can do my profit to drawdown for every year in my trading. I know what it was. And so, I'm aware of what 38% drawdowns were, and I know what they did to me. And it came to the point where I said, I don't want to be on this roller coaster, because you have a big run and you lose 30% of your capital, and you have another big run and you lose 35% of your capital. And you come to the point, Riz, where you say, it is no fun having to make the same dollar over and over again. This is not fun.
Yeah.
I made it, but now I have to make it again.
Is it extremely volatile with the emotional curve?
Yeah, I think so. Because I think there's a level where it's almost exponential. 5% drawdown, 10% drawdown is more than twice as bad emotionally. A 6-month peak to valley drawdown is more harder than a 3-month peak to valley drawdown. So there's an exponential curve that's probably different for different people, that you go, I got to do something.
Yeah. Because
I don't like these drawdowns. I don't mind losing months, losing trades, losing weeks. And I've had 4 losing years.
Really?
They're no fun. And you go, I don't like having to make the same dollar over again. And to not make the same dollar over again, I need to either change my risk parameters or I need to completely change the way I trade. And for me, I was comfortable with how I traded. I liked how I trade. I still trade the same way today, for the most part.
How much had you gotten your capital up to leading up to 87?
Probably up to 10 mil.
Really?
Yeah.
Wow. And then, you had that phenomenal year in 87, then 89.
Well, yeah, and I had some bad years, and I hit some bumps, and I burnt out. 94, 95, I kind of went flat. And I burnt out because we had gone to Forex markets which were 24-hour markets. And at this point, I hadn't built a trading firm. I mean, it was kind of me against the world. Yeah, I had a gal that worked for me in the office and did stuff for me, and my wife helped me with stuff. But, you know, I was just kind of a sole proprietor trading. I really hadn't started a trading firm as such. And so, you know, I'm calling Commodity Corp, which had its own Forex desk. And I'd say, okay, here's the band I have tonight for the German mark. If we go outside this band, call me. You know, and so it comes to the point where your wife says, you've got to move out of the bedroom because I need sleep.
Yeah.
You know, you're getting called every night because Forex markets are moving by past your band.
Yeah.
And back then we did have 24-hour markets unofficially in gold because Hong Kong was trading gold at night. And so you kind of had a I could place orders, I could do gold trades in Hong Kong. And so so I kind of got burned out. I took 10 years away from the markets, 95 to 2006.
What did you do in that time? Were you just
I
retired?
started nonprofits and funded nonprofits. I kind of got into the nonprofit world. I needed a break. And at first I thought, Riz, okay, I'm going to take 2-3 years off. I just needed a sabbatical.
Yeah.
Right? I'd been doing this for 20 years at this point. And I needed a sabbatical. Money wasn't an issue for me. I wouldn't have necessarily had to go back to work. But and I thought, what can I do? And so I actually even became an NGO at the United Nations.
Really?
Yeah.
Wow.
And I went to United Nations meetings around the world. I've been to Cairo. I've been to different United Nations meetings. I have a badge. I still have my badge, my United Nations NGO badge. And so I was funding organizations that needed money, that were nonprofit organizations I believed in, I thought were doing good work. And I did that, and I thought I'd do that for 2 or 3 years, and I ended up doing that for 10 years. And then I thought, maybe inflation, maybe I don't have as much. Maybe I actually do need to put a little bit more money in the bank.
Yeah.
And that was scary because I start back in 2006, and I go, I'm not sure what I used to do still works, right? I mean, that was the scary part, is that because all my capital at that point went passive for those 10 years. I didn't trade futures markets, didn't have a quote machine, didn't have a computer. And, I'm going to start charting again because the markets had changed. We'd gotten to Globex.
Yeah.
All my markets before that, I'd call down to the floor. I had brokers and floors that I knew that I trusted with my orders. And so, back in the Commodity Corp days, maybe I'd do 150 gold. And so I'd want somebody in the COMEX that I knew personally to work that order. They could say to me, Peter, let's back off for now. I think I can do a better job on this order. If we wait 10 minutes, I think I can work this order. Give me some time to work the order. And so that was gone. There were no more pits. The pits were going away.
Yeah.
And all of a sudden, I'm doing it on a computer on Globex. And now I've got charts on a computer. I'm not doing my charts by hand anymore on graph paper, right? Is this all going to work again? And I didn't know that at that point. But I was willing to give it a try.
Did it end up working?
2007, I had a great year. 2008 was my last 100% year.
Wow.
2008, I had a 2X. That's my last 2X. I thought I was going to have one this year. I really thought this year I was going to have a 2X. But it tailed off. I thought in May, June, I'm on track. I'm on track to do...
Why did it tail off, do you feel? Markets? Or?
I think markets, yeah. I hit some really good markets early in the year, but that's the way it is. Because not only does Pareto apply trade by trade, but I probably can go back week by week and find that 20% of the weeks produced 80% of the profits.
I think it's quite a universal principle from your profit amounts, from even the stocks or pair or whatever it is that you're trading. Usually they say the same thing, like 20% of your profits will 80% of your profits will come from just 20% of the stocks.
And for me, it's really 1585. If I go through the years, it's 1585. Wow. So that's close enough. I think Vilfredo would be okay with that if I use his name. But so then the issue then is, what do you do with the 85? Because you don't want the 85 to overwhelm the 15. So how do you get the 85 to scratch? You understand it? Scratch trade. How do you get a few small winners to offset the losers so that in the end, it's only the tip of the iceberg that you care about?
Yeah.
And because you got to go through a lot of grunt work with the 85, don't you?
No, 100%. And I think it's important to recognize that what a lot of people, I think, fail to understand is you still need to take all the other trades. Like even if you had just 20% of trades that gave you this bulk of profit, those 20% of trades are going to be, fewer, less occurrence. And yeah, you could sit there and say, I'll just wait for them. But I think there's two problems with that. And I'd love to hear your thoughts. Is one being that your mind isn't as sharp in the markets because you're not as active as you probably should be. So when the opportunity comes around, when you're meant to potentially size in more or at least execute properly, flawlessly, you might hesitate because you haven't been active, you haven't been taking trades.
Yep.
Essentially like trade, like ring rust for boxers, similar principle. But then secondly, also is that you want that capital, those buffers to be able to size in on those trades, whether you size in more or not. But at least having the option, or at least being in a position where you're not in, let's say, drawdown or just a very flat base, you've actually got a buffer of profit from those other trades that you've taken that might not be part of that 85% of profit. That would be my thought. What are your thoughts on that?
No, I think that's spot on, Riz. I think you nailed that actually, because for me, the hard part for me is, the interesting part for me is my expectations of a trade are probably inversely correlated with the outcomes. The trades that I have the biggest expectation for are usually the biggest duds. The trades that I kind of were blasé about, I don't know if this is going to work, are the trades that end up being Paretos.
I've heard that a lot, yeah.
And so you got to take them. I mean, last week, I shorted Bitcoin last week on the charts. And I told people on social media, I'm going to get sucked in by a bear trap here. I knew I was going to get sucked in by a bear trap here. I just knew it. Instinctively, I knew this trade is going to be a loser, but I got to take it. Because at what point do I say, I'm going to trust my judgment more than I'm going to trust my process? I've got to trust my process, knowing that I'm going to have to go through junk in the process, right? The process is going to grind. It's a grind. I love traders who I would consider to be grinders. They're grinders.
Yeah.
They're grinding it out.
Definitely.
And they're not spectacular. They're just grinding. And part of grinding is you just got to take them when they come. Now, that doesn't say that I may not go on vacation for 2 weeks and not even pay attention to the markets. You got to do that. But what it does say is, and it doesn't mean that you're not going to miss trades. You're going to see trades. You're going to miss trades. Hey, everyone misses trades. That's the way it goes. But what it means is when you see a trade, for me, when I see it the day before, because my rule is if I see a trade during the day, I can't trade it.
Yeah.
I got to wait till the close and then try to do it the next day, because that's my buffer from FOMO.
Interesting.
Right? I got to have rules that keep me away from myself, because I'm my own worst enemy. And I think that's true of a lot of traders. They're their own worst enemy.
Yeah.
Who they are wants to sabotage what they're doing. And so if I see something, now someone shows a chart on social media and I go, God, I missed that. Boy, I missed that. That happened recently in aluminum. I look, oh man, why didn't I see that? I haven't been charting aluminum. Why didn't I see that? But if I happen to see it, I got to take it. Now, maybe I don't take it with 80 basis points of risk. Maybe I take it with 40 basis points of risk, or maybe 30 basis points of risk, but I got to take it, right? That makes sense,
definitely.
Right?
No, it does. And what I was going to say in terms of off the back of that is the risk side, because you had that really, really big year, which had elevated risk, market conditions on your side, and the youth on your side, the being more risk adverse, etc. But I know that throughout your journey, I think increasing risk was something that was kind of difficult. And what's interesting through this tour is, not only just through the tour, but generally as well, is there is quite a balance, to be fair. There are those who are really adamant on static risk, stick to the 1 or 2%, whatever it may be, but stick to that. But then, recently, especially on the tour in particular, the dynamic risk has been quite a theme among some really, really incredible traders. And S&B Capital, for example, huge on really sizing into those. If you have a lot of
big
conviction,
big size.
What are your thoughts in terms of that? Let's take it two approaches. Let's say for the beginner trader, or when I say beginner, maybe not brand new, but someone who hasn't found their edge just yet. Like what should they be looking at versus the person who's more intermediate?
Yeah, I know exactly what you mean. I think you got to really understand your trade to develop the instinct that here's a trade that has a little bit something special to it, right? Here's a trade that not all trades are created equal. Okay. And
that's a great saying, actually. I've heard that one before.
I kind of sometimes think, what if I would have been the real gambler? That's a timeline that I didn't live in, so I can only imagine.
Yeah.
But what if I would have taken all my profits, separated them, and said, I'm going to bet 20% of my profits on the next trade, right?
Yeah.
What does that timeline look like? I don't know what that timeline looks like. So there's no way to know what that timeline looks like. But when I went into the business, my goal in the business was to be a career trader, to be a craftsman, okay? I wanted to be a craftsman. And I didn't want the guy that had this, I didn't want to be a Michael Marcus where I turn 1,000 into 1,000,000. That was never my goal. It was never something that I thought about. I knew guys that did that. It wasn't something I thought about. I talked to a guy today that turned 70,000 into 3 million.
Wow.
In 4 years. 4 years. So I don't trade that way. But I think I'm excited for guys that do trade that way. I'm glad I know guys that trade that way, right? It's fun to know them. It's fun to go out and have dinner with them and hear their stories.
Do you feel like it comes down to maybe personality?
Totally. Yeah, totally. I came from a really poor background. I came from a single parent family on food stamps where if I wanted to get something at 14 years old, I had to go pass out flyers for the local grocery store. So that's the world I came up into. So I knew no money. And even when I switched from what had been my job for a couple of years prior to trading, I was in advertising. I think when I went to work at the Board of Trade, I don't know, maybe we had a couple $1,000s in the bank. That was it, and you got married young. And we didn't have money until probably I'd been in the business for 2-3 years, and definitely not until 1979, 1980 when I really started, my trading started humming.
So do you feel like that's the association to risk comes from that, do you think?
Yeah, I think so. I have a Substack. My Substack is Risk Adverse Trader.
Yeah.
I'm a risk adverse trader. And so I'm not saying that everybody should be risk averse. For me, everyone keeps track of I do not look at my balance. I try not to look at my balance. I don't want to look at my balance. I haven't looked at my balance in probably 3 weeks because I want to focus on the market, and I'll let my balance surprise me later.
Yeah.
And so one thing I tell people is you got to decide, are you looking at your balance for really intellectual progress reasons, or are you looking at your balance because you're nervous? And if you're obsessed with looking at your balance, that's probably a bad tell, right? There's certain tells that says, maybe you shouldn't be doing this. That's one of the tells, is you're obsessed with knowing what your account balance is, because I don't really care. I'll take care of itself if I do the right thing.
Yeah.
And so, so for the IRS, Internal Revenue Service, which is our tax entity for the federal government, I have to report my profits made during the day. Then I have to also report profits based on changes in open positions, right? So you have realized profits, then you have open profits, unrealized profits. And for the IRS, I have to show what was my unrealized profits last December 31st, what is it this December 31st. Yeah. So there's a formula that you go by. So for the IRS, my open profits are important. For me, I don't want to really pay my attention to my open profits. So when I keep my balance, I keep my balance based on an NAV against sequential open trade results. And so I know what my NAV is, and all of a sudden I have a 200 basis point profitable trade that closes. That's what it is. And so I look at my drawdowns based on sequential closed trade NAV. For me, I would be panicked if I had a 5% drawdown. It would send me into a state of shock. I'm comfortable with 2 to 3% drawdowns now. And so I think that reflects. Now, there's some guys I know that, you're a wimp, Brant. What a wimp you are. I mean, seriously, if you're a real trader, you got to let it roll, baby.
Yeah.
Well, I don't want to let it roll. At stage of my career, fast approaching 80 years, being in the business now 51 years, I don't want to be on that roller coaster anymore. But yet I want to make money trading.
Yeah.
Because I want to make money doing something. I want to trade because I love trading. It's a challenging game for me.
Yeah.
I love the process of trading. And if I'm good at it, I'll make money at it. But for me, I don't like the seesaw. I don't want to be on a roller coaster anymore.
Yeah.
But I do think that if somebody really wants to grow account, they really want to goose egg an account, right, Riz? I mean, they want to take $100,000 to $2 million. They'd like to do it in 5 years. They're going to have to take some risk.
Yeah.
I mean, that's the reality. They're going to have to be willing to sit through 20, 30% drawdowns on a pretty routine basis. Because I think Jack Schwager would say there's a formula. I mean, you just have to go based on your gain to pain and your profit factor and your Kelmar.
Yeah.
You're a great trader if your rate of return is 4 times your worst drawdown. That's world class, right? I mean, it's outstanding. It's extraordinary if your drawdown is only 1/3 of your rate of return.
Yeah.
And so if you want to do 100%, you 30%, that's outstanding. 20% is world class.
Yeah.
And so, you got to be willing. You want to shoot for the moon, you got to white knuckle it sometimes. And
you think some people are just ingrained to not be able to change?
Yeah, but I think there's also that balance. There's that balance between being willing to roll the dice and but also that balance between wanting to exploit the game and knowing you could get hurt, right? So you're always kind of looking for the shadows in the corner.
Yeah.
There's some people that just want to they're reckless.
Yeah.
And even if they make money, they're going to recklessly lose it. And there's certain tells. You can see them on social media. You can say, boy, you're an accident waiting to happen. Because they have all the tells of an accident waiting to happen. Where there's some guys that they're going for it. They want a big year. They want to go from $100,000 to $3 million in 3-4 years.
Yeah.
But they also know there's times they got to really be guarded. Mm-hmm. And so there's that balance in personality, right? And you've seen that. You've talked to so many traders. Definitely. You've seen it.
I think also it's a huge part of that is whether you increase risk or not, is the mindset behind it is being a performer, like a high level performer in the markets. Similar to yourself, like the reason you still do it, I would imagine, is less so the financial side, more so the performance, like just the passion for the performance and constantly performing well in the market. That doesn't necessarily mean winning all the time. It just means that you're constantly trying to optimize, improve, and essentially beat the market. So it's not even performance against anyone else. It's against the market itself.
Well, no, I'm not. It's not me against the market. It's me against me. It's me against my rules. How I keep track of something that I call leakage. And I formally keep track of, that's a stupid trade. It's leakage, right? I want to keep my leakage to 1,000 basis points a year. And I'm pretty brutal in evaluating myself on that because, I'll be stupid. I'll oversize a trade. I'll break the rules. When I break a rule, can I monetize what that breakage was? Yeah. Right? And can I keep track of it as a measure of accountability for myself?
Yeah.
because you're right. I mean, it's just, for me, I just want to be excellent at what I'm doing. I mean, a lot of people have said, you know, I've always taken money out of my account. As a prop trader, I've lived off of my account. So so to some degree, I haven't compounded my account, right? I haven't compounded my account over the years. You know, I've taken money out. I bought real estate. I've not been in debt since 1987. I haven't owed a penny to anyone. I buy homes and I pay cash. I don't like the idea of debt ever. And so for me, my prop account has always funded my life. It's funded college educations. It's funded IRA accounts. It's funded pension accounts.
Your nonprofits.
It's funded nonprofits. So I'm always withdrawing money. You know, and again, you talk about time. What if my timeline would have been, I'm not taking it on, I'm just going to let it roll?
Well, this was an ask you. How important is it to actually pay yourself for all the hard work and all the things that you're doing?
Yeah. Yeah. Well, yeah. So, you know, it hasn't been, there was a point at which I knew I had my account to grow. You know, when I went in, it was $88,000. That's what I started with, $88,000 in October of 1981. It was the initial deposit into my brokerage account. At the time, it was, Gelderman was my broker, which sold out to Revco, which went broke and bankrupt, which, you know, whatever. But, you know, I knew even then that guys that were the real deal at the Board of Trade were trading $1 million. And so, yeah, I'm still kind of a rookie, even though I've got my own shop, even though I know I need to make money. You know, I need to pull out 40 grand this year to live. How am I going to do it and grow my account? How am I going to live off this money and grow my account? How quickly can I get to $1 million? Because at $1 million back then, I figured, okay, I'm not a real deal now.
To put it into context, probably $1 million back then would be about equivalent of maybe 5 million. Now,
yeah,
6
I would
million
say
now.
so.
Yeah,
you know, but at that point, yeah, then I can actually, now I'm just not a trading. Now I'm a trader, right? And I can consider myself a trader. And I can have lunch with any guy here at the Board of Trade, and we're two traders having lunch together.
Yeah. How did you handle those pressures, those thoughts, like, as you mentioned? How did you handle, like, one, being around other traders who were performing at higher levels? How did you handle knowing, you know, I need to pay myself this year, I've got these bills I need to pay, I need to make this much? Because as we know, those sort of pressures on trading can usually be the reason why people underperform and have the psychological problems.
Riz, I was lucky because I had that income stream, right? I had that income stream all the way up to when I said, okay, 81, income stream's gone. So through then I had the income stream. And I can't imagine what that would be like. A guy happens to put together 100 grand, he's going to trade, and he's got to pay for his, wow. You know, that wasn't my timeline in life. So, but if I try to put myself in that position, that's not a very good place. I would not want to be, you know, if someone says to me, Peter, when do I know it's time to quit my job? Right? And I've been asked that so many times. Hey, I've been trading 5 years. I've been doing pretty good. I love it. I love trading. I want to be a trader. I'm an engineer at XYZ, Bridge Corp, Builders, when's it time? Yeah. My answer for them is say you got to make sure that your account's all profits. Yeah. Not your wife's money. It's not your inheritance money. You didn't take a second mortgage on the house. It's not your savings. So your entire account is your profits. Number one, got to be profits. Number two, the entire amount of your account has to be backed by 2 years worth of savings to pay your bills. So that's separate from your account. You got to have enough money separate from your account before you quit your job. And so you 2 years to pay all your bills, pay your kids, dentist, having
all the costs.
Yeah, all of it, all in. And then your account's separate from that. So you don't have the pressure of having to take money out of your account right away every month. You're taking out $6 grand to pay your bills. And so, and then the amount of your account has to be 3 times what realistically you think you can make a year over the next 3-4 years.
Interesting.
And so, you know, if you're going to need $100 grand to live on, you need $300,000 of profit before you quit your engineering job. So that's your task. You got to get there. Now, a lot of people are saying, I don't need to get there. I can pay $200 a month. I have a SIM account for payout that's a $2 million account. Good luck, buddy. Yeah. Hey, and if they get, I got to be clear on this, Riz, all the more credit to those guys that do it. I want to know them because I think it would be cool to know these guys.
There's one trader who I know you've had interaction with. And I think there's maybe just the classic social media thing of not knowing the person and so on. You know Trader Kane?
Yeah, I know it. Yeah.
But you know Trader Kane? Like
we've gone back and forth.
I know. And I'd love to say to you though, like, you know, I know Trader Kane through the podcast. And, you know, I've verified everything with him.
Yeah. I'm not picking him anymore because I think he's probably got something going.
Good.
Yeah. Personally,
I understand why you would feel the other way originally.
Yeah.
Because of, like you said, these companies and how they're set up. You know, as an example, you know, as we talked about earlier, like, you know, they want profitable traders. They want you to profit, right?
Yeah.
But then when he made that amount, he's not allowed to trade with them anymore. They paid him, which is great. But then,
you're gone. Well, they don't want to do SIM. They want to move him into trade for real.
They don't even want him to do that.
Well, I mean, there is one, I'll name it from a Top Steps here. It's in Chicago. I mean, their rule is they want to move people from SIM for payout to live funded accounts because they know they want to have traders. They don't want to have gamblers bleeding them on big months, right? Yeah. And I understand that's a smart business decision. I give them credit for that business decision. But yeah, I mean, for me, again, comes back 71 traders and market wizards. I don't know anyone, including myself, that's pumping my performance online. I've never mentioned on Twitter my rates of return. I don't mention it because for one reason, I think it would jinx me. I think I
have that feeling.
Yeah, I think good guys that I know are traders, they go, I'm not going to tell anyone that I made $100,000 last week. I don't want to tell anyone that.
To play devil's advocate on that, I think there is benefits to it happening when good people, you know, whether it's Kane or whether it's like Umar Ashraf or whether it's Lance Breitstein, like these verified traders, people who have verified their performance. The reason I say that is because if, let's say, they aren't the ones showing, whether it's profits or percentage or just trades, then all that's left, and I've always said this as well, like, you know, when some people try and make the argument of, if you're profitable, why would you have a community or Discord or sell something of some kind? And I always try and make the point that if they don't do it, if the real traders who actually are performing well and doing really, really well and verified, of course, if they don't do it, if they don't show them, if they don't help, you know, try and spread awareness and maybe have a Discord or whatever it may be, then all that's left are the snake oil salesmen.
Yeah.
You know?
Yeah.
So it's like, I understand your point.
Great point.
Yeah.
Great point.
I do understand your point because I've, you know, the jinxing side of things I understand. And then also it's like, what are you trying to achieve? There's a bit of ego there maybe or whatever. But I do think that there's two really beneficial things. Is one, it allows people to come across real traders, you know, people who are verified rather than the lifestyle stuff. But then secondly, I think there's a good, you know, kind of what's missing from the trading world that used to take place, like being on the floors, being around other traders, having access to that. Now it's, as you say, everyone's at home, you know?
Yeah.
And therefore, by real traders, especially on Twitter, it's a big thing on Twitter, or X now.
Or YouTube.
Or YouTube as well, yeah. But I think the thing with X is it's like conversational compared to YouTube.
Yeah.
So I feel like
I agree. Yeah. There is social interaction.
Yeah, sometimes good, sometimes bad.
Yeah, I don't allow people that are not verified to respond to me anymore. Because they're all trolls. I mean, if I say only verified can reply 90%, or I can actually get engagement, right? Real engagement. Or if I say it's open to the world, 90% are, you need to retire, old man, whatever. Yeah, come on, really. Yeah. And so that's why I say, hey, Elon Musk is my hero. I think Elon Musk is one of the greatest men alive today. And I think Elon Musk saved free speech in America and is trying to save free speech in the world.
Yeah.
And my attitude is, if you can't pay whatever it is, $8 a month or whatever, to have a verified account in Twitter and to support free speech, you don't deserve to be heard on Twitter.
Yeah, that's fair.
Yeah.
It is fair. But yeah, I think just to go back to that point, the collaboration aspect, being able to communicate together and you know, it's really helping other verified traders, or at least other traders who are trying to go down that route, to be able to learn.
It's an encouragement.
Yeah.
You know, it's someone's doing it. There's hope for me, right?
Yeah.
I see someone doing it. They're willing to share. And I think that's generation. It could be generation. Nobody in my generation is going to be Trader Kane.
Yeah.
But I think that's a Z generation thing, is, you know, you wear your leather jacket out in public.
Yeah.
Right? I mean, you show your tan legs off whenever you can. Yeah. So I think that's a generational thing.
Yeah, for sure. Yeah.
And so, hey, all the more credit to them. There are certain people who maybe I was critical in the past. I'm no longer critical of.
Yeah,
I'm no longer going to take a shot at them, because I think all the more power to them. I think it's great. Again, I love the fact that we are in a world of speculation.
Yeah.
Market speculation is attracting so many people. I think it's fabulous. But what I'd like to see, and I'm okay if they brag about it, is let these guys prop trade the way they want to prop trade. You know, if they're sim traders,
Yeah.
let them learn. Don't force them into a box.
I think so. Yeah, I agree.
Let them trade however they want to trade, because if they lose money, they're losing paper money. It's not going to cost the firm anything.
Yeah.
And the firm can keep charging them whatever, $50 a month, $100 a month. They can charge them that till the end of the world. And it's just a computer thing. But let them try to learn a way to trade that they trade. And just say, hey, so you got a $250,000 prop account. You're paying us $100 a month. Hey, if you lose it all, you lose it all. That's on you, buddy. Then if you want to open another one and keep paying us $200 a month, that's fine. We're game for that.
Yeah.
But now if you start one and you make money, and we move you to payout for sim, then you've got that payout. That's your money in real trading now. You know, you've made, and some of these firms have transitioned to that.
Yeah.
Is you make $100,000. Now guess what? You've got $100,000. You're trading micros, and this is your money to lose now. But you can trade it. But I'd like to see them then be able and still not have to trade to fit into the box.
Yeah, I think so.
But they've got that $100,000 that they've made. They can't take it out. Maybe they can take some out, but they have to. So they make $100,000 payout. They can take 50 out. Then there's 50 left.
Yeah.
But now they got to trade that 50. That's theirs to trade. There's no more sim for payouts. Now they have to trade real. They have to trade micros.
Yeah.
You know, they have to trade micro, NASDAQ.
They have to trade their own way.
They have to trade their own money. And they can trade however they want.
Yeah.
And if they lose the 50, that's on them. And if they lose the 50, then they keep paying in and move back into sim for payout. We restart the clock, right? That's a world of sim trading that can say, Peter Brandt endorses that. Peter Brandt will endorse and sponsor, not for money, because I won't take any money for a firm that I have something good to say about. That's just always been my policy.
Yeah.
Whatever research we have, we buy.
Yeah.
We don't say, we want your comp service. We don't do that. If we want research, we pay for research. But it can be, hey, I'm gonna endorse this firm. I'm gonna speak at this conference. I'm gonna do what I can to help it because I believe in its cause. There's not one yet that I can believe in its cause. There are some that are skirting with that. They're flirting with some good ideas.
Slowly. Hopefully, this conversation will help in particular.
Yeah.
One thing I'd love to ask you about in terms of your own trading is you are really big into technical analysis and chart patterns.
Charting.
Yeah.
Yeah.
Now, what was it about the chart patterns that resonated with you?
Okay. So we're 1975, 76, 77, 78, opening accounts, blowing up accounts, opening accounts, blowing up accounts. And I'm trying to be a fundamentalist in grains. I'm looking at supply and demand tables. I even buy this little cycle finder that looks like a gate for a miniature chihuahua, right? I'm looking at seasonals. I'm looking at spreads. I'm trying everything. I mean, I'm literally, I'm in the clothing store and I'm trying on suits and, Velcro pants. And a friend of mine, another guy, said, Peter, I'm buying you a book. And he buys me the 5th edition of Edwards and McGee Technical Analysis of Stock Trends. I still have the book. As a matter of fact, I've since bought the original, not even the first printing, because it is the printing.
Wow.
Leather bound by John McGee, autographed by John McGee himself.
Wow.
And I looked for years for that with rare bookstores, but I finally found one. And so I get this book, and I read this book, and I go, God, does this make sense? I get this. Here is a way to understand the markets. It gives me a way to say, here's where I'm going to get in. It gives me a way to say, here's where I think I get out if I'm wrong. It gives me a way to say, here's where I might expect a market to go. I can say, here's where I think corn can go. If I buy corn at 320, I have reasons to think corn goes to 370. And it's like, this makes sense to me. And this 1978, early 1978, I consumed the book. I just voraciously ate the book. And then I never looked back. I became a classical chartist. And in the book, in the preface of the book, it references a guy by the name of Richard W. Schaubacher. That all of this work was formulated by Richard W. Schaubacher in his 1934 book, Technical Analysis and Stock Market Profits. That never had a second printing. It never had a first printing. It was only manuscripts back then. It's since had a printing. And I wrote the foreword for the hardcover, recent hardcover reprinting, first hardcover reprinting of Richard Schaubacher's book. I wrote the foreword to, which I consider to be such an honor.
Of course. Yeah.
Great honor. British publishing company did it. And so but all of a sudden, but then that's just the start, because then you got to learn what patterns do you like? What's a good pattern? What patterns work for you? What patterns don't work for you?
That was one thing I wanted to ask about the patterns. So on the surface, it's easy to literally look at the surface and go, okay, this is a head and shoulders and this is a channel and so on. But are you looking deeper than just the physical appearance of the chart?
For me, price is everything, right? I don't use indicators. I do use some indicators. I mean, I have a moving average. I use a moving average, but I don't use it systematically. For me, it's a proxy for trend. I don't like trend lines. I think moving averages are proactive trend lines. They're active trend lines in effect, right? But just drawing a line in a chart, you throw a chart book in a monkey cage with a ruler and a pen, and sooner or later you're going to have a trend line that makes sense. So you kind of learn what's the personality of a pattern. What patterns kind of you think head and shoulders top in Bitcoin I knew was lying. I had to take the trade, but I really believed it was lying. And so you get a feel for what works for you and then what time frame works for you. And for me, it was weekly, daily charts. Weekly charts give me an idea. Daily charts give me timing. Daily charts give me risk points. And so for me, it ends up being, and it's trial and error, right? I mean, Riz, it's just, you're winging it to try to find out what about the charts work. And so I will use commitment of traders, reports coming out from the CFTC, who's long. I don't want to trade. I want to trade with the commercial. When the commercials have a big long position, I want to look to be long. I don't look at RSI, stochastic, all of that for me is
nonsense. So if you have your
nonsense.
pattern, you then are just laying it with confluence, such as, say, the COT reports.
Yeah, maybe. It'll give me extra confidence, right? It gives me a level to say, okay, I'm going to lean into this thing a little more than normally I would.
Is it a case where you are identifying these patterns in the learning phase? This is, so identifying these patterns, and then off the back of that, you're picking up on the pattern of the pattern, if that makes sense. So like
personality of the pattern.
That's a better way of saying the personality of the pattern, where those traits are common and reoccurring. And then so when and it could be, as an example, off the top of my head, let's say, for example, you're already in a bullish market, a particular pattern presents itself, and based on the personality from the past, and this is where data collection can really help, is when it's presented itself in this market condition, with other characteristics and maybe some supporting confluences, it becomes a trade worth taking.
It becomes a tradable market. And so that's a trade for me, right? It presents itself as a trade. It's all of a sudden, I communicate to the people I communicate to, is I'll say, this is a chart of interest. Hey, it's an interesting chart. It's kind of cool what's going on here. It's cool. It might be a chart of educational interest. We're looking back and we can learn something from what happened here. It may be a chart of tradable interest. If I say to somebody, this is a chart of tradable interest, which I don't do on public Twitter, by the way. You know, I'll never say that. That's kind of more private communication. Chart of tradable interest, they know I probably have orders in.
Yeah.
I'm not in it yet, but I figured out, I'm going to be in it if certain things happen. Or it's a chart of positional interest. I'll say to somebody, a chart of positional interest, they know I'm in. They know it's a trade I'm in. And so I look at that, and I think it's trial and error, and certain patterns work for certain people.
Yeah.
It's a personality thing. I know for me, I have a cohort that lives in Europe that keeps pretty good track of how patterns do. You know, he looks at charts kind of the way I look at charts, because the reality is I could look at a chart and, God, if I look at a chart long enough, I'll find a reason to trade it.
Yeah.
And so I want to look at a chart and in 1 second know that there's a possible trade for me. I don't want, guys used to say, I'm going to go home and study my charts. I'd go, huh? Well, what do you mean you're going to go home and study your charts? What's there to study? And so it gives you something to trade or it doesn't give you something to trade. And so for me, there's certain patterns that I really like. I like ascending triangles.
Yeah.
I like rectangles. I like charts that have a horizontal boundary, not a diagonal boundary. I look for charts that seem to have some symmetry within it. There's some balance in the different parts of the ups and downs within the trading range.
Yeah.
I look for charts that the congestion area is less than 15% of the net asset value of the asset.
Yeah.
Right? I look for charts that are a minimum of 6 to 8 weeks and a maximum of 26 weeks, with a sweet spot of 12 weeks.
Yeah, and I wanted to ask you actually, just in terms of time frame wise, like was it ever a struggle to get used to holding trades for so long and managing trades as they, going, because during that time period, you're seeing P&L go up?
No, not really, because I put myself back into context. Back when retail traders in 1975 were paying $50 to $100 a round turn. Commission. Commission. And, now they can trade for free, and with some FCMs, we'll let them trade for free because the FCM's selling, they're selling liquidity.
Yeah.
Right? But, right now we pay $3 around. I have no problem paying $3 to $5 around turn. I mean, that's just the cost of doing business. But back then, people didn't day trade for the most part. I mean, if you're on the floor, you day traded. If I could go on the floor, I was trading for next to nothing. But the minute I left the floor, I'm
Just
paying
trade for
more.
yourself,
And the minute I decided to relocate my family to Minnesota, I'm paying even more. And so for me, as an and I went off floor because I wanted to trade more than grains. And so I wanted to trade sugar. I wanted to trade gold. They weren't CBOT markets. I didn't get CBOT rates. Day trading was not feasible for me. So I think speculators back then, if you weren't on the floor, you by default held positions overnight.
Yeah.
Because otherwise I mean, if you figure out back then what Paul Tudor Jones was making per contract, might have been $70, $80 per contract on average.
Wow.
Is what he was making. You add $50 commission on that, and all of a sudden your profit's gone. It's gone. So I became a position trader because that's just what you became back then, as you became position trader.
Definitely.
So it's all I've ever done. I've just learned to hold trades.
What would you advise someone out there or people out there who are trying to swing trade, and that's their struggle though? Their struggle is handling the P&L, handling the hold time. What do you think you could say to them?
Well, I mean, the first thing you say is you're going to have to learn, because it comes back down to Pareto. It comes back down to cutting your losses and having a mechanism by which a profit can become larger. You got to figure that out. If you don't figure that out, go home. And so what it means is you've got to find some ways to be willing to postpone the desire to take the profit that's sitting there. And for me, that was restricting myself to only enter orders at one point in time, right? Is I either got out of a trade when I was stopped out, or I got out of it when I'd hit a target. Now I could move those stops, right? I could progress those stops in the direction of a trade, but I couldn't react during the day because I just felt like I am going to defeat myself if I keep looking at markets. I will find a trade that I shouldn't get in, or I'd find a reason to get out of a trade that I should stay in. And so what do? How do I battle those inner demons? The first thing is you got to recognize it is an inner demon. It is you yourself trying to sabotage your success, right? And so I'm not saying that has to be universally applied to other traders, because it may not have to be. Yeah. But I'm going to apply it to myself, is I've got to find a way to keep a trade. The only way I can keep a trade is to have rules. So I had to develop a rule. I have rules. I mean, I've got rules for just about everything. I got rules when I can move a stop, and how I move a stop, and where I move a stop. And so my accountability is to my process, not to the outcome of the next trade. And so I have to look and say, I'm going to trade. I figured I've traded 25,000 trades in my career. That's what I figured. Now, that's trades. That's not contracts. So you got a multiple of 25,000. So let's say I've averaged, even 5 contracts. So I've got I've got a database in my head of 125,000 contracts. And so I have to think, what's my best practices? And it takes time for a new trader to develop a list of what worked for you. Someone says, well, how should I trade? What's already worked for you? Yeah. Think what's worked for you. Think what's not worked for you.
You think a problem as well that traders face is that they're seeking perfection?
Yeah, you seek progress, not perfection. And you seek.
And that progress, I think that what you said there in terms of process, focusing on the process, that's been a big thing of the verified traders that we've spoken to over this tour, is that for them to reach 7, 8, 9 figures in profits, it's always been that they focused on the process of doing that.
Yeah, it's all process.
The P&L.
Yeah, it's all process. This is a process business, not a trade business. It's what happens over hundreds of trades and hundreds of contracts. It's not changing your trading style. It's not optimizing. Yeah. Someone said, Peter, why do you use an 8 and 18 day moving average, or 8 and 18 week moving average? I don't know. Have you ever examined what it would be if you got into trades only when they closed above your line instead of intraday? No, not really. I haven't really looked at it. Have you ever considered using a 50-day moving? No, not really. Why? I don't know. I don't know, because what I know is what I know. And you can't optimize. Cannot optimize. You cannot. That's why to some degree, guys that run computer programs against indicators end up being frustrated. Is they're looking for perfection. Is what set of indicators or combinations of indicators against this database produce the best metrics for me? That doesn't work. Now, there's some value to that. I don't want to say there's no value to that. There's some value to that, because it starts to put you on a track. But at some point in time, you got to commit and say, I allow myself to tweak my rules once a year.
Interesting.
Once a year I'll say, is there some area of my trading that maybe I want to mess around with a little bit? For this year, I'm trying to cut my trading frequency down. I want to, I did 250 tranches last year. I want to reduce it to somewhere under 200 tranches this year. And so I have to do some tweaking to get there.
Of course, yeah.
Yeah.
Final question for you, just because of the wealth of experience in particular, and I think it's important for traders to know, because it kind of goes off the back of what we were just saying, where people are searching for perfection. And as part of that, they're always trying to find something that once they have it, that's it. They can stick to that for the rest of their career.
Yeah.
And I want to ask in terms of, as you've noticed, just from all the technology differences and, the fees we've talked about have changed, how important is it, or how many times have you noticed that little tweaks had to be made to your strategy to keep up to date with conditions and markets themselves and the volatility and different factors that are in play from one decade to the next or one cycle to the next?
That's a brilliant question. Thank you for the question. That's a great question. I mean, again, I can only answer for myself, but I'm going to assume that what my answer is going to apply to a lot of those 71, right? It's a market wizard response. It's pretty good market wizard response. You always have to be aware. You have to be aware of what's happening in the algos. We have more false breakouts today than we did. You got to be super aware of what the algos are going to do in overnight markets when thinner conditions come up. So you always have to become aware of those things and make little tweaks. And so you have to evolve. You have to evolve, but you can't make just wholesale trades based on your last trades. Yeah. I've got to change something because in 2024, if I would have done this instead of that, it dramatically changes my results. No, you can't do that. And so your changes have to be based on some principle or some guideline. It has to be based on something that deals with common sense principle as opposed to something you fine-tuned. And that, I think, is the key. So, my trading is different. But here's an interesting thing. This a couple of years ago, I gave a speech to what's CMT now. It's, it's Certified Market Technicians is the group. It wasn't always CMT. It used to be